let some people trickle in here and then we will get going. Okay, let's get started. So imagine investing early in the infrastructure powering the AI revolution. Not the applications everyone sees, but the foundational systems beneath them. The energy grids, compute engines, and orchestration layers that make AI possible. The companies building the picks and shovels of intelligence that every AI application depends on to train, deploy, and scale. You will learn today how AI infrastructure is revolutionizing software development across 6 crucial areas, from energy and compute optimization to agent architecture and frontier model research. Alumni Ventures has made investing in this $14 billion plus market accessible through our AI infrastructure and tools syndicate, giving you deal-by-deal access to the rails, runtime, and operating system of intelligence. Now, what we're going to do is we're going to hear from Alumni Ventures partner Meera on today's topic, the future software stack, from steering the car to the engineering the autopilot.
Hey everyone, Meera here, partner with Alumni Ventures. Really excited to speak with you all today about the future software stack and discussing a bit more about AI infrastructure and tooling. I'm going to give everyone a few moments just to trickle in, and then we'll get started. All right, I think we'll go ahead and get started. Yeah, as I mentioned, really excited to introduce, how we're investing in AI infrastructure and developer tooling. What we at Alumni Ventures believe to be the foundational layer that's turning AI from really simple demos into durable enterprise-grade systems. So excited to have you all here. But maybe before we get, fully in the weeds, I'm going to pause and remind everyone, we're speaking today about Alumni Ventures and our views of the associated investing landscape. This presentation is for informational purposes only and is not an offer to buy or sell securities, which are only made pursuant to the formal offering docs for the fund. And with that, I'm going to give a little bit of background on myself. As I mentioned, I'm a partner with Alumni Ventures Spike Ventures Fund, and I focus almost entirely on early stage AI infrastructure, developer tooling, and enterprise applications. And that really stems from my background. I come from a mix of finance and operations. From Yale University, where I worked on major system transformations like ERP overhauls, to early stage venture studios, where I incubated new enterprise companies. And I also, built technical products through the cloud platform shift. So I've really seen firsthand how a new platform can rewire, how we build and scale software. So today, AI feels like that next shift. The same pressure around things like reliability, cost, security, and scale, but now we have sort of new constraints that really require a fresh framework to sort of consider them in. And with that, maybe I'll give a little bit of an overview on Alumni Ventures, in case you're a little newer to us. We were founded in 2014, really to give individuals access to simple, high-quality venture portfolios. We've raised, over 1.5 billion from about 11,000 investors and invested in over 1,600 companies. So really sort of an astonishing feat. And it makes us one of the most active venture firms globally and the largest US venture firm for individuals. And in terms of why that matters for this category in particular, in infrastructure, access really matters. And the best deals are often relationship driven. And our platform has given us a lot of surface area with founders, with co-investors, and with experts in the category. So this is community driven, at its base, and is very true within infrastructure as well. In terms of what we will run through today, I'll sort of give you a high level look. We'll cover the why now, and what makes this time the most critical moment to both gain a deeper understanding and to invest in AI native infrastructure. We're going to go through our thesis, and how we've broken down the category into sort of distinct practice areas. We'll highlight some amazing portfolio companies that are already making waves, across the infrastructure stack, including recognizable names like Cohere, Lambda Labs, Together AI. And finally, we'll cover, how we're building community and go through this new offering, a deal by deal syndicate model. But first, I wanted to touch on this, this new syndicate that we're launching. And in terms of joining, I just wanted to take a quick minute to talk about how this works. We are increasingly, offering the opportunity for our community to take a peek under the hood, really a try before you buy approach, and take a look at the opportunities we've been able to source on a deal by deal basis. So instead of saying, trust us, we can get you into the best deals, we really want you to see it for yourself. We don't currently have, a dedicated infrastructure and developer tooling fund yet. That's obviously the hope and the plans for a future date, but in the interim, what we do have is a lot of high quality AI infrastructure deal flow. And so you don't have to take, my word for it. If you join the community, you can see this deal flow for yourself. But instead of getting it as a portfolio, you're seeing, 1 to 2 carefully curated opportunities per month. And so similar to anything that we do, we'd be sharing and communicating our thesis, our diligence, our broader market work for you to be able to make an informed decision. And it's really straightforward. Joining is totally free. Investing is completely optional. And so it's pretty simple in that way. If a deal resonates, you can participate. The minimum check size is 10K, and in doing so, you can build a personalized infrastructure and tooling venture portfolio over time. So think of this as sort of the same institutional access as our funds, but with even more flexibility to invest in the opportunities of your liking. So we're really excited to be offering this to our community. And with that, let's get into the meat of this. And I'm going to start with the big picture, right? So we see AI infrastructure as this new cloud moment. Cloud changed where software runs, and AI is changing what software is. And this is simply, more than just some incremental feature upgrades. It's really an entire rebuild of the software stack, putting intelligence and data at the center. And the evidence is really already there. Developers, I'm not sure if, folks have friends who are engineers, but developers have moved quickly. Roughly 90% are using AI daily. And platforms like GitHub, have seen material revenue impact just from AI. But we argue that the bigger shift is actually architectural. So teams are, moving away from purely deterministic systems to what they call LLM in the loop workflows. And so you're seeing code that orchestrates models and tools and data. And the standard for a product to be production ready now includes metrics like latency, it's cost per request, it's in the quality of the output. So it's really like moving away from the standard error metrics that they used to track and now optimizing for something much greater. And on the enterprise side, it gets even clearer once teams try to put AI into production. The focus quickly shifts to orchestration and validation and automation, and to the guardrails that make these systems reliable and controllable, things like governance and access policies, and all these systems that catch issues that traditional, quality assurance really didn't. And with this new reality that's sort of settling in, investors and strategics are also responding. So we've seen, more than 14 billion has been invested in AI infrastructure in 2025 already, and that's already surpassing the 2024 number. And on the M&A side, we've seen major acquisitions over the past several months, including IBM's acquisition of HashiCorp, we've got Cisco's acquisition of Splunk, and we've got HP's acquisition of Juniper. And this really reinforces that corporations recognize that infrastructure is the new competitive frontier. So the takeaway from our standpoint is that the market recognizes this is real, but the stack is still being rebuilt. And that's what makes this a compelling moment to focus on the picks and shovels. And this is the rails that the entire AI ecosystem will rely on going forward. So we're very excited about that. The next few slides, I'm going to start peeling the onion, so to speak, of AI infrastructure. And to keep us all grounded, we'll start with a very simple framework, which is what we consider the 4 pillars of AI infrastructure. We've got energy, compute, data, and talent. Now, starting with energy, of course, matters because power right now is a real constraint. And the only way to really optimize for that is deriving efficiency. And that is becoming a real product advantage across the board. You then have compute, which is what I'd refer to as the engine room. You've got GPUs, emerging hardware, companies that are building at the edge, like devices, and the optimization layers that drive real price performance. Next, we have data, which is naturally the lifeblood of this entire stack. Clean, governed, contextual data is what is ultimately turning models from sort of these impressive demos into very useful systems. And then finally, talent, which is really the multiplier. It's the people who are building, operating, and securing these systems, plus the tooling that they're using to ship and maintain these systems as well. So this framework really matters because it also keeps us honest. When we think about making investments in this space, we're not making one narrow bet, on a single model or a single application category. We're building sort of exposure across the foundations that every AI outcome depends on. So we think this is a really important place to sort of start. And then when it comes to, AV's thesis on the space, we want to invest in sort of three components here. It's the rails, the runtime, and the operating system of AI, the true picks and shovels that the entire ecosystem is running on. So whether you have, a technical background or not, here's a really clean sort of translation. The rails are, the underlying energy and compute and the data systems, that I alluded to earlier. And that makes AI possible in the first place. The runtime is what AI actually works in production. It's what makes AI work in production. It's the orchestration, the deployment, the monitoring, and the scaling. And the operating system is the layer that makes AI usable, right, inside real organizations. It's the developer tooling, the security, the governance, and the controls. So again, rather than betting on which individual AI application wins, we focus on the foundational layer that every AI company needs, because that's really how we captured the wave in a more diversified and arguably durable way. So with that, I'm going to bring some hopefully an understandable analogy to the forefront and make this a bit more tangible. So if the AI product is Autopilot, then infrastructure is everything that makes Autopilot safe, scalable, and reliable. It's the parts that you don't notice until something goes wrong. And I think that's, largely true of a car as well. When you look at the AI stack through that lens, in our minds, it breaks down into 6 main components. So first is the driver, and we refer to that as agent architecture. And this is, the decision-making layer. It's how an AI system plans, chooses tools, manages memory, and executes on sort of multi-step goals. If you've seen any products that, can take a task and actually complete it across systems, this is that layer doing the driving. And from there, you have AI toolkits, or the dashboard and controls of the car. These are often what I call sort of instruments that developers rely on to build and tune. It's evaluation harnesses, it's prompt and version management, it's testing, it's observability, and it's all the workflows associated with deployment. Think of companies like LangChain as sort of a recognizable example in this space of tooling that has helped developers stitch systems together and iterate more quickly. From there, I'm going to go, further under the hood into what we call sort of model training and inference, or the engine. And I know I touched on this a little earlier, but training turns data into a capability. Data or poor quality data is really unusable without sort of real, sort of robust training. And inference turns that capability into real-time output. So this is where performance and cost are won or lost. It's latency, batching, quantization, and throughput. And companies like, some of our own portfolio companies like Cohere sit close to this layer on the model side, while other infrastructure companies like our portfolio companies, Together AI and Lambda, are part of making training and inference accessible and efficient. And I know I touched on data and the importance of sort of high quality data. And we sort of, when we look at data systems, we think about the fuel and the supply lines. If the fuel is dirty, the engine sputters. And I think hopefully we've not all experienced that, but we know roughly what that means. And it's the same with AI. You need pipelines that are clean, that organize and govern and deliver the right data at the right time, especially for retrieval and grounding in enterprise settings. So this includes everything from ingestion and labeling to lineage, governance, and retrieval infrastructure. And next, we're moving into security and governance. And of course, with regards to the car, that's the brakes, the airbags, and the insurance. As soon as AI touches core workflows, organizations need to be able to control that. And that comes down to like policy enforcement, access management, monitoring usage and protection against issues like data leakage or prompt injection. And this layer is what turns sort of something that's a cool feature, a cool function, into something that's actually deployable, and gives enterprises and users the confidence that the AI is functioning in the way it's supposed to. And then finally, it's sort of when we're looking sort of, many, many years out from where we are today, which is the frontier model research, or the R&D lab. It's all the next gen cars that are coming off the lot. And this is where new architectures and training methods are invented. And it shapes the requirements for everything else that we talked about earlier in these slides. Every jump in capability forces the rest of the stack to evolve. Anytime there's a new evaluation approach, new data demands, new safety requirements, every other component of the stack needs to adapt. And so the reason we spend time here is pretty simple. It's infrastructure wins when it becomes embedded. If you're building any serious AI product, you end up solving every one of these categories. And the best founders building these layers don't just enable the ecosystem, they can become the default tools the ecosystem runs on. So this is sort of how we're spending our time from an investment perspective. We're constantly sort of identifying really promising builders and companies in these categories to ensure that when we invest in the full stack, we are being comprehensive. We are thinking about things holistically. And this was a helpful way of contextualizing that. Now, I touched on a few names already, but I just want to anchor this with some recognizable examples. AV is building this syndicate from a very strong position of strength. In terms of our AI infrastructure exposure, we've backed really strong companies like Cohere, Lambda, Together AI, and countless others. And we've invested alongside fantastic firms like Andreessen Horowitz, Sequoia, Khosla, among others shown here. And that really matters for two reasons. First, it's a sign and a signal on access and underwriting. We're consistently operating in the same opportunity set as really high caliber investors. And second, it reinforces what we're actually focused on, which is the layer directly beneath intelligence. So it's not just these flashy applications, but it's really the systems that are making AI production grade. They're performance-based, they're reliable, they're secure, and they're scalable. And so this is sort of core to our thesis going forward and is evident in our track record today. Now, I touched on community earlier, in the presentation, and this is truly, one of AV's advantages across the board, but it's especially true when you're investing in a developer-centric, ecosystem. As part of that, we are building, a developer-first hub that connects both technical and non-technical builders. And you'll see, through the community and the portfolio events that we're planning to run events in sort of lockstep with larger conferences across the US. And the relationships we're building are showing up consistently. That network really sharpens our sourcing, it strengthens our diligence, and it helps us support companies post-investment, while also keeping our team close to what developers are actually doing. And the photo on the right is a really great example. It's from our recent Coding with AI event in New York City. We hosted that a few weeks ago, and it was co-hosted with a couple of our portfolio companies as well. And as part of that, we brought together over 50 engineers to share, how are they using AI day to day? What is sort of helping them, what's hindering them. And these insights are really important because it fine-tunes our investment approach. It makes sure we're not sort of seeking out flashy, features and instead seeking out really sustainable platforms. And the flywheel is really simple. It's, when we build a community like this, it drives access. And access drives, stronger deal flow, and stronger deal flow strengthens the community at large. So I'm really pleased to be part of this ecosystem and building it alongside Alumni Ventures. Nice. Okay, so bring us back to sort of this syndicate approach. We really view this as an amazing time to be part of this sort of revolution in AI infrastructure. So if a lot of this and a lot of the discussion that we've had today is of interest to you, we'd be happy to connect. So feel free to reach out. And as a reminder, wanted to emphasize again how this works and how you can participate. So you can join the infrastructure syndicate. It's totally free to sign up. You'll see sort of 1 to 2 deals per month. You'll get our thesis and diligence to get comfortable with how we're understanding and how we're thinking about it. And if the deal fits your view, you can invest at a 10K minimum. If it doesn't fit your view, then that's no problem. You don't have to invest. We're still co-investing alongside all of these top firms that I mentioned, and the same opportunities that all of the AV funds are doing as well. So it's just on your flexibility and on your terms of how you like to invest. And in terms of getting up and running, it takes, about 3 minutes to join. If you're interested, you can scan this QR code and walk through the process very quickly. And hopefully it's relatively straightforward, but if not, we're always available to answer any questions. And finally, even if you never invest, you will learn a lot from the content, from the research, the webinars, the founder discussions, the deal memos. I can say that, even by sort of building and engaging in this community, I continually learn every day, as to what is sort of feeling sustainable and a worthwhile place to invest versus, other categories that are sort of flashes in the pan. And our view is, we are really excited to wake up every day and invest in the future of software. And we really want people who are equally as excited. So signing up is free and investing is optional, but learning is guaranteed. So we're really excited to have you all potentially join us here. And if you have any questions, please don't hesitate to reach out. But with that, I think I will transition to some Q&A because I know that we had questions coming through the channel. A couple of these questions are more tactical, so I might sort of tackle those first. So the first question is, do most of your investors build their own portfolio with the syndicate? And yeah, that's a great question. Based on what we're seeing that, about 25% are just doing deals, 25% are just doing funds, and about half of our investors are doing both, for diversification, for learning, for leaning in on companies that they believe in. And I think that, whatever sort of strategy sort of resonates with you is the one that you should sort of follow. I think the beauty of the syndicate approach is that, again, it's not binding. When you sign up, you get the opportunity to see the deals that we're evaluating, that we're moving forward with in our investment process. And it's a great way to sort of ramp on a category that you may be less familiar with or be very familiar with and want to be sort of more discerning in your investment approach. So I think it kind of meets the investor where they are, whether they're a seasoned expert or new to an entirely new category. So I think that's sort of, it makes sense that that's where our distribution is and meets sort of learners where they are. The next question is, if I join the syndicate and see a deal I like, can I invest with my retirement funds? And the short answer to that is yes. If you have any questions about, how to invest or what pools of capital you can use to invest, please reach out to our investor relations team. They can walk you through all of that detail. But to answer this question directly, yes, you can use retirement funds to invest. Those are all the tactical questions I'm seeing right now. But I am seeing one of the more thematic ones, which is, is there concern that names like Amazon, Google, and Microsoft will develop all this themselves? Yeah, this is a really great question. The answer is yes, but it's not a thesis breaker. And what I mean by that is, the best way to think about, the Amazon, Google, Microsofts of the world is, they will likely build some layers. They'll likely commoditize other layers. And they'll still leave and, often create, big openings for independent winners. And I think there's like a few dynamics at play here. First, hyperscalers like AWS or Azure and others, they won't build everything. They will build ultimately the components that defend their core business of cloud consumption. And the AI stack is really just too broad and too fast moving. There's so many sub-layers that are likely better served by specialists. And then another, point is, enterprises really want optionality. So therefore, neutrality right now is a wedge. Buyers really appreciate solutions that can serve multiple cloud environments. They can serve multiple models, and because they don't really want to be locked in. They feel like they're leaving a lot on the table when they lock in with one provider. And so this really creates room for, multiple clouds, multiple sort of solutions, and it creates room for this independent Switzerland, across layers. And so we firmly believe that there is still so much opportunity given this sort of buyer dynamic that we're seeing. And then, another point is really that, they serve a significant or as a significant validator and as a distribution partner. When AWS or Azure develops features, they confirm budgets and urgency. They essentially are saying, this is really important and therefore we're investing in it. And so many startups win by integrating and riding that distribution. So that's an important thing to track. And then finally, as I mentioned earlier in the presentation, M&A has been rampant in this category. And the rationale behind that is, these larger hyperscalers, these larger, Magnificent Seven companies, they often buy more than they build. So if a third party becomes the default layer, acquisition is often faster than rebuilding it entirely in-house. So it's for those reasons that, yes, it's always important to sort of be tracking these larger incumbents, but it's by no means a thesis breaker. In fact, there is so much white space, to build in this category today. And we're really excited about that. I think that might be all the time we have for questions, but if you have any more, please don't hesitate to reach out. And thank you so much for joining us today. I hope you had you had the opportunity to learn a little bit more about the software stack or the next gen software stack, and I hope that you're able to join our community. So thank you so much.
Okay, Meera, thank you so much. That was great. The future of software isn't being built on top of AI, it's being built beneath it. Thank you for joining us, and if you're ready to invest in the picks and shovels powering every AI breakthrough, scan any of the QR codes you've seen on your screen today, or visit av.vc to explore our AI infrastructure and tools syndicate. And as always, we will see you in the stack.